All right, folks, welcome back. This is the midweek review for the ICT Mentorship. This is June 9th, 2021. All right, so we're looking at the daily dollar index. We moved off this imbalance. We were looking for that to occur, and it has done so, but now we're in this range right in here. And tomorrow we're waiting to see what the Central Bank of Europe is going to do. So ECB is going to have a monetary policy announcement tomorrow during trading hours, and it's probably going to give us some volatility. Now, I don't know, obviously, what they're going to say, and I don't know what the algorithm is going to do as a result of that. And also, these are times when manual intervention is seen. So even if the announcement comes out one way or the other, we could still see a directional move that would be contrary to what would make sense. So I'm going to stay with the narrative that we have been working lower. We created an optimal trade entry in here, even though we had this little bit of a pullback in here intraday. That might be just a red herring to make people think that we've created a low, and this pin bar type formation will be seen as potentially bullish. Now, I'm not saying it can't end up becoming a bullish move. It takes out this high. I don't personally think that's likely to occur. I'd like to see it, again, make an attempt to trade below this low and work towards this level down here. And if we get some kind of wild announcement tomorrow from ECB, that could be the catalyst they use to reprice dollar lower. Okay, the dollar index hourly chart. Next buy side liquidity pool is right in here and then here. This one has the sell side imbalance, buy side inefficiency with it as well. So if we do rally on dollar, we'll be likely to see it trade back up inside this imbalance. Below this low accelerates us down below to get the sell side liquidity below here. $15-minute time frame dollar index. Low resistance liquidity run signature here. Lower high than this one here. And we had a run all the way up from here. This is where the next, again, short-term buy side liquidity pool is. All of this in here with this breaker, like if we trade back down in without taking buy side liquidity, this would be an area to watch and see if we get a reaccumulation there, and then send it to the 90-20 level buy side liquidity. All right, here is the economic calendar for tomorrow. Now, I have not been showing you recently, but I want to really preface it by saying just be mindful tomorrow that the 10th of June, we have at 7:45 a.m. high impact euro monetary policy statement and the main refinancing rate. And then 8:30 a.m. we have the ECB press conference, and then high impact dollar, CPI, and core CPI with unemployment claims as well. Lots of volatility tomorrow. Okay, so if you're trying to trade with live funds, this is the time when you absolutely don't want to do it, because if you make an error tomorrow, it could end up punishing you much more intensely than you probably would want to endure. All right, here's the euro dollar daily chart. And again, you can see this pin bar. Most traders are going to see that as bearish. I don't like to look at that and say, oh, it's bearish because it's created this ahead of a news driver like tomorrow. This to me doesn't indicate anything. I like to see it run right back over top of that again. So think about the fair value gap right in here that we looked at as a potential draw on liquidity. It did that. We've rallied since then, and we have this high and this high with low resistance liquidity run signatures. So that to me makes better sense for them to drive it up there. Now, does it go lower, knocking out anyone that's long? How much lower? That I don't know. And this is why I tell you, ahead of these types of announcements, it's important for you to respect the amount of risk that's there. Don't get caught up into thinking, okay, well, I know institutional this and I know smart money that, and ICT taught me this and that, and I'm ready to go. I personally respect the risk in this environment. So I'm not ahead of these releases. I'm not positioned ahead of it. I'm flat. I have not done anything. So Wednesday's trading, I'm literally observing, and everything's really quiet ahead of ECB. Hourly euro dollar. We had a run into the rejection block in here. So we've had non-farm payroll reaccumulated in Monday. We went higher, retraced, rebalanced, order block, consolidation, optimal trade entry here, rallied, another optimal trade entry here, displacement, rejection, we got it, traded softer. Now we do have liquidity resting right below this low. And if you look at the overall trend in here, all kinds of trend lines are going to be on this. So I like to run below here. So they could take it down to that, whipsaw it, and then go higher on ECB news. That would be something that would not be expected. That would be painful. People would not want to get right back in right away if they're stopped out. And or if I'm wrong and dollar does go higher and the euro is repriced lower, we'll be looking for a run below here, and it might need to come back into this area here one more time. And that to me doesn't bode well for underlying bullishness. So this would actually set up a decline here and then a bounce and then a heavier short that would take us through this low. That's what I would expect if we get back into here. I'm still favoring the long side of euro because it's the higher time frame order flow and bias on the daily chart. All right, here is what I shared on the forum on Monday. And I've had some issues with splitting the groups. So I've got a few leakers still, and I'm subgrouping. So to save myself a lot of time and aggravation, I simply been posting the chart and annotations and what I would have said in those charts on the forum itself as just a picture. So that's why you've seen on Monday and Tuesday this simply a chart upload. It's very easy for me to do. It's quick. It's not as secure, obviously, but it gives you what I'm thinking about and salient at the moment. But this is what I shared on Monday. I said that we would likely see it continue up, make an attempt to run into this area here for buy side liquidity, and it pretty much drew up into that area. Price rallied up in, attacked that level for liquidity, and then rejected harshly. Had a little bit of a return back in here on this breaker because a high, low, higher high, and then it's rejected this candle's body. Draw that out in time, hits it there with a fair value gap. Continuation lower, attacking the sell side liquidity here formed in London. There is a liquidity pool resting below here. That to me is too clean. But if they're going to go down there, I don't think it's going to go down there to go up. I think they're going to go a little bit deeper than that and attack that low. And then consider what I mentioned when we were on the hourly chart. The main point here is be respectful of the risk tomorrow. I'm trying not to point to specific things because I don't want to entice any of you. I don't want to give you that little nudge and you think it's like a secret code word for you to go in there and trade with live funds tomorrow. If you do that, you're gambling, okay? I want you to understand that you are gambling. Now, after the ECB announcement and say it's 9 o'clock in the morning, any imbalances or obvious liquidity pools that may be targeted, then yeah, you can go in and engage after that. But before that, you really are gambling. All right, here's the British Pound daily chart. And we have been maintaining this consolidation in here. We've had 1, 2, 3, 4 times pressing up into this old high. And again, if this thing breaks this low right there, your attention goes right to this area right there. Focus primarily on this candle's low. Okay, so if we lose this, my expectation is here. not a lot in terms of pips, but it would sink this lower, and the overall market structure would still be bullish because we have a low, the high, and we trade it back down into a discount. And then it could potentially trade higher longer term. And again, that's assuming that we get weaker ECB announcement tomorrow, which allows the Federal Reserve to raise and reprice dollar higher. But I'm not going to go out on a limb and stand in front of this tomorrow and say that's what's going to happen. I don't know. So because I don't know, that's why I don't trade ahead of it, and I don't position myself in trades ahead of something like that. It's literally asking to get your clock cleaned. All right, here's the British pound. We've had many attempts in here now to try to get back above that 142 big figure. 1, 2, we failed lower here, failed again here, intraday, and traded softer. To me, again, this just feels like they're setting it up. Like it's classic failures to go higher. You can see books and authors and teachers, and they'll say, this is clear indication that whenever you see this, this is why you want to sell short. And I don't look at it like that. I think of it as, okay, they're knocking on the door, they're pounding on the door, they're putting their boot on the door, they're stomping on the door, and then finally they're going to make their way through it. Kind of like the SWAT team when they bust in to do a raid. That's how I see it, okay? And that imbalance here, this is so enticing to me with the breaker. So we have a breaker inside the middle part of that gap, which is consequent encroachment, and we have these relative equal highs. So even if it doesn't go all the way up and close in that gap, if it just goes to midpoint, then fails, then cascades lower to take out these lows, that to me would make more sense, especially considering we have this long-term trading range on the hourly chart. Now, long-term is a week or so. So that's what I'm saying here. Not that it's long-term in terms of like weeks and months, but long-term for an hourly chart, to me, this is a whole lot of consolidation and ranging that hasn't done enough, in my opinion, to take out this and to challenge this imbalance. All right, here's the British pound 15-minute time frame, and we rallied up, creating the high of the day in London, taking out buy-side liquidity, failed to get up into the discount low of the hourly sell-side imbalance, buy-side inefficiency. So we had a nice little optimal trade entry here on New York Open, displacement on the downside, attacked sell-side liquidity, and this over here as well. We had a retracement back up into the breaker, which is these last two down close candles prior to this run up. So we have a high, a low, the higher high. If that low is broken, we have it here. If it retrades back up into it, and then we also have the sell-side imbalance, buy-side inefficiency. So it trades back up into that and the breaker. Sells off, attacks the sell-side liquidity here, and it's just consolidating around that. Again, I want to be very careful with what I say because I don't want any of you to get hurt tomorrow. Just observe it. If I see anything that is likely to get attacked for liquidity purposes, like a buy stop or sell stop area, or an imbalance that needs to be revisited intraday, as we approach 9 o'clock, if I see something right around 9 o'clock, I'll put something on my community channel. I'll just make a reference to something that I'm observing. It may or may not mean I'm taking the trade. It just means that that's where my interest lies after ECB has made its announcement and the 8:30 news embargo is lifted. All of that hits the market. What the chart looks like after that, then I'll take a look at it. But prior to that, I'm not interested in anything. So just relax. Let whatever drama is going to unfold tomorrow morning in the New York session, let that happen. Okay, give it 30 minutes to work out and let the dust settle, and then the market will find its footing or not, and then we'll consider whatever's in the charts at that time. I'm going to ask you folks, if you would, if you're not interested in things that are off topic, you're welcome to end the video here for yourself. I'm going to be talking about something that's not market related. As you know, I am married to a woman that brought a child into our marriage like I brought a child in. And she's my daughter, not by birth, but I raised her. And she is a very strong-willed woman. She has just moved to another state, trying to make a new start in another state. And she is very independent and free-thinking. And I don't agree with a lot of the things she thinks about and how she holds her opinion, but I respect her opinion to feel the way that she does. She's the only one in our family that has taken the vaccines. And that was about 6-7 weeks ago. And she had both doses. And yesterday she started having a cough and she's having difficulty breathing. So I have been worrying a little bit about that this morning. And if you would, keep her in prayer, because she's not doing really good right now. So again, this is just to remind you folks, she was fine before she had the vaccine, and now she can't breathe. She has issues with her respiration. So if you could, please, if you're a person of faith, I would appreciate that. Just keep her in prayer, and hopefully the Lord puts his hand on her and allows her to get well. And that's going to be it. I appreciate your time, and I'll talk with you guys tomorrow. Be safe.